A little late there on that start of this. My bad. Check the volume here. Check, check. Seems to work. Let's get started. Let's review the trade plan. So the whole routine involves reviewing the trade plan, reviewing past trades, reciting some affirmations, and then also reviewing that. Well, that's it before the market starts. So the trade plan, if we conduct that part of this, the technical side of it is to use the monthly, weekly, and daily charts and do candle analyses on those, which is just internal and external liquidity, as well as impulse structure. Looking for potential draw on liquidity based on that. So it's all price-based draw on liquidity. Then I do smart gain concept analyses. And I conduct that on the month, weekday, and session, using the 4-hour, 1-hour, 15-minute, and 5-minute respectively. So what this does for me is identify time-based draw on liquidity based on the quarters. And then I also couple that with the price-based draw on liquidity, looking for projection blocks and state of delivery, which will identify the impulse direction on each time frame and distribution areas. So with all of that, look for scenarios that could be playing out based on those analyses, and really wait for the scenarios to align in some way where it makes sense for effectively the session analysis. The session time frame aligns with some of the other gann concept analyses. And that's what I do in the pre-market. And then when the market opens, I look to see if those scenarios are playing out. And if they are, I wait for effectively M1 impulse structure to align with the trade, and then trade with that impulse structure in the direction of the higher time frame objectives. Universal entry criteria is that I want at least 2 reward for what I risk to the cleanest or the clearest distribution area on the entry time frame. And I can enter based on internal fair value gap entries, or other types of entries on the 1 minute, but typically these are the 2 that I focus on. And I'm always looking for whatever creates these impulses. I'll look for sort of where that impulse starts from, and that's where I place my stop. If I'm getting the indication that the 1 minute impulse is in the direction, but there's not a clear 1 minute entry, then I'll start to look at the lower time frame to see if that's aligning with the ideas, and it's pretty much the same thing, just one fractal level down. Looking for a sweep followed by an engulfing candle. That'd be a simple sweep entry, and then enter on the manipulation or order block, or really projection block, that is generated from that sweep. So M1, if I'm entering M1, I'll do a full R value. If I'm entering the lower time frame, I typically do half R value. And 50% off at the first distribution area, and then trim as we get to other areas. Now, on the risk that I'm trading, at the end of the day, I'll use the artificial intelligence to help me analyze my trading for that day, and I'll also do my own commentary to review and see what's going on. Look for areas of improvement. So today, I am back on sort of my full set of accounts. So I have 6 evaluations, 3 150s and 3 250s. And I have 4 50Ks and 1 150K PA. So I'm trading all of that. Now I'm grouping it such that I'm doing 1/20th risk on my PAs of the effective drawdown, and I'm doing effectively 1/10th risk on the evals. So a little bit more aggressive on the evaluations, trying to get those funded while still making progress, hopefully. Well, I will be making progress on the funded accounts because I'm trading them. So I'm making progress in getting the experience trading funded, which is slightly different psychologically than trading evaluations because, at least in my experience, the evaluations, I guess in some ways I have a little bit less invested, right? I mean, in reality, that's the truth because evaluations I can start at any time. They cost less. I just have less time and money invested in them, whereas PAs have a little bit more invested, so I want to be a little bit less aggressive with how much I risk per trade. But the idea here is that I'm following the plan. That's it. That's my job. The risk management side is something that I've calculated ahead of time, and my max loss on a day is going to be 3R. So if I get to 3R down, I call it. That's it. Done. Otherwise, if I'm trading according to plan, right, I can continue to trade. So that is that. That's the trading plan and the risk management as well. So now let's go look at some past trades. So I want to have a long look at yesterday. This was the final trade, and I took it very aggressively at the bottom here. Let's start with the high time frame just to get the idea of what's going on. So we had this projection created on the hourly. This was the distribution area. We had this small pullback impulse, which met its second distribution area on the hourly, and wicked out of that. So this was before the market opened, right? Well, actually, this was 9 to 10 o'clock candle right here. And you can see that we had effectively, is that right? I'm not sure what candle that was. We'll have to double check. But anyway, this pullback impulse, right? You had the projection block here because this candle closed above the liquidity level, which was essentially your EQ of the range within this hourly fair value gap. And then from there, you came back down. So this one arguably was your projection block, and these are the two distribution areas off of that. So pulled back, reached the second distribution area and rejected with a major wick. So the idea in the trade I was entering this candle was that this was going to be a wick block, with the overall bias still on this larger projection block to get up to here, right? And notice that this pullback here also had tapped this projection block again. So there's a couple of confluences here on that, and then rejected it. He staved off this balanced price range too. So on the hourly, the anticipation was we were getting up here. And you also had this hourly P block to the downside. Price did end up coming in and taking this out. I was out of the trade by then. On the 15-minute, right? So we can see a little bit clearer. Yeah, so this all occurred before the market opened. 9 o'clock candle starts here. And I was trading essentially the last bit of that 9 o'clock candle on the hourly. So that trade was entered around 9:45 or so in that 15-minute candle. But effectively, you came down, you had swept London low. You had also hit this distribution area to the downside and then rejected the daily open right there. And this looks like a volume bounce on the 15 that it also rejected. And then you got this clear inversion of this fair value gap to the downside. And then you were left with this 15-minute balanced price range here. So the trade was presuming that this balanced price range was going to hold, that this was your projection block, that this was your distribution area, first distribution area, second distribution area. And yes, price eventually hit this second distribution area. So the trade that succeeded was entered off the resweep of the daily open. And if you look at the 5-minute, this is the session, right? We had this also clear projection block with another jump start out of here, which price actually did end up holding. And we had hit the first distribution area of both of those, and then we rejected. But there was no clear impulse to the downside, and this is what I'm seeing more and more of, is that if there's not clear impulse to the opposing, you can still trade the existing impulse, especially if there are additional targets to the upside. And then what I also noticed is what I've been noticing a lot is that you get sort of a fake impulse out of there for the continuation, and that's what ends up getting liquidated. And so that got liquidated here. Again, my trade entry was really aggressive, and I think the better trade entry in this case was once you created this projection block here, right, on the 5 minutes. So the more patient entry, the more entry really to my plan would have been from up here, and it would have gotten a ton of R as well. And that's sort of what I want to focus on here is that, yes, yesterday I was fortunate to have this trade succeed, and it was a banger. I think it 23 to 1 or something, or 29 to 1 or something, this trade. But I'm not, that doesn't mean that that's the sort of trade. This is the sort of trade that I want to take over and over. The one to me that's more convincing is once you get essentially a liquidation of this first fake out, and then you get this projection block here, and you still don't have any clear impulse to the downside based on my definition, that at least that hasn't been met, right? Then you're presuming that this is all based on a retracement of this, and you get this clear rejection here, and there was a trade right in this candle right here. So that's the 5 minute look, and then we can look at the 1 minute to where that trade is that I was talking about, where you get this sweep down into also, this had created this, I think it was this projection right here, and this was the first distribution area. So you swept into that first distribution area on your M1. You got this sort of closure above the down candle. You could have been really aggressive and traded this wick block on that M1, but the more, I think, conservative confirmation entry was once now you broke up, and this was the close of the 5 minute candle there. This was the close of the 5 minute candle, creating this 5 minute projection block. You had this inversion on the M1 that you could have entered right here effectively with a stop there or there, and then ridden that same move on that. So that was the 1 minute sort of confirmation entry on the trade that I was already in on. And arguably, you really, if you'd been aggressive, if you wanted to be aggressive on the 1 minute, you could have presumed that this was going to work. But presuming can lead to losses more often. So I think acceptable if you can accept more losses, but I think the higher probability trade was once we had this closure here, you had your complete market structure shift on the M1. You really had it, above here too, but you had it here. And this was the candle that really pushed through and closed above this fair value gap here, the bull bear fair value gap. So at that point, the next buy side liquidity is up here. So you have that, and you also have a pretty clear projection block here on the M1. If you'd use that, because that came back and effectively was the propulsion block off of this wick block. So you had targets off of that. So the entry could have been right in here, with that being, you also closed through this wick block second DA, so you also had that as a possible target. So there's a lot of reason at this point in this wick that came down and back into this inversion fair value gap. That was the better entry on the 1 minute. Now, I was trading ultra aggressive yesterday and saw the sweep of the daily open within the 5 minute, within the 1 minute distribution area. So there's a lot of confluence here. And the hourly was bullish by my analysis, and I saw this very aggressive reaction off of the daily open here, and so I actually entered within this wick block. And even here, I think it was an early entry because you got your confirmation of the bull impulse here, and so even on the 15-second, you hadn't reached your first distribution area. The entry could have been over here on when it came back to test the wick block, right? So the wick block hadn't been confirmed when I entered. I was entering super aggressive, not something I recommend. So that was that trade. And, it worked out great. There were a couple of trades before that I took because I was being aggressive, and it's worth just reviewing those. In this case, right, I had the sweep of this, so I was calling out in the market, like, this is going to get swept. And yet I was trading before that on the first trade. In fact, let's start with the first trade. Right, so I was trading before this level swept, and I was calling out that this wanted to be swept. And really, if I look here, like, there's no good manipulation on the 1 minute that I could trade from that hadn't been met. Like, if I were to call anything on this, it'd be this wick block here, which had met its objectives 100%. So this trade is an example of being impatient and not waiting for the setup, and lo and behold, it did lose. And so that's something I need to pay attention to and get better about not trading those. especially because I was indicating in the stream that this level needs to get swept. So the current draw on liquidity here is to the downside. And if you did use this sort of wick block on the 5-minute, I'm not sure what the distribution levels were there, but effectively, yes, you have this bull impulse, but at this point, it's met the distribution areas here, and it's likely that we're going to come back down to the projection block for a retest. So the high time frame was not in line there. And then on this one, similar story, where I had this M1 distribution area down here that hadn't been hit off of this projection block here, I believe, or maybe it was here, I forget, but effectively, like, I was trading counter M1 impulse with, even though I had swept the M5 here, what's not shown here is the daily open was down here as well. So there was draw and liquidity to the downside based on these higher time frame targets. And so that was effectively 2 losses on the way down that could have been avoided had I just been more patient and waited for the true trade to set up, which fortunately I was patient enough with myself that when I did see this entry, I took it, and I wrote it all the way up to there for the final target. Now, obviously, I took some profit along the way. I think because I was on 15-second, I did take a 1R. Notice that like my return here is 4.57. It's really 10. It's really over 10 because what I do is I normalize it to my desired risk level. So, this is my actual stop was below this candle's 550, whereas what I put in here is 494.65. So with that, hopefully that instills in me what I'd like to instill in me before the market opens, which is that the objective is to follow the plan. The objective is not necessarily to trade for profit. It's to I've established a good strategy with positive expectancy, and I need my objective in trading is to follow that plan, and that's what we'll try to do today. So with that, I am actually going to take a very brief break, and I'll come back to conduct the pre-market analysis after. Let's make this large. Okay, so let's go conduct the pre-market analysis. We always start with the monthly candle analysis, which we still have 10 days left in the month. I'm relying more on the smart gann concept analysis here to identify sort of what the objectives are. If we do close below these levels, then I would suggest that we start attacking some of the sell side liquidity. But if we can close back up on the previous month high, potentially on the overall, then the distribution level here is valid. Now, if we close down, I'm not like, oh, we're in a bear structure on the month. It just means that we might come attack some of this sell side liquidity. This distribution area is valid until this low is taken out. So we could have a lot of pullback and still have this as an overall bull objective. So again, not too much on this analysis right now as regards to what we're intending for the day trading. So with that, let's go look at the weekly candle analysis. On the week, we had close above previous liquidity, and then we've pulled back into the breaker block. Last week, we closed above the main threshold of the breaker block. We have already liquidated the previous week's low, so arguably, the objective of this week has been completed. The first objective of this week has been completed. I don't necessarily anticipate that we come and run these lows just yet. And rather, we're still in sort of bull impulse structure here. We have no bear impulse structure generated, and our weekly objective is up here. So this could be an area, this breaker block could be an area where there's enough liquidity to continue to move up. Whether that happens this week or next is TBD. But the fact that we've now liquidated the previous week low, and that might have even happened just recently, is suggestive that that could be the liquidity along with this breaker to start an up move. So I might anticipate some bullish action on the week. But again, I'll rely more on the smart gann concept analysis to indicate as much. So with that, let's go look at the daily candle analysis. Just to review the weekly, like the objective of the week, the candle analysis met its objective already, so there's not much to tell there anymore. All right, so indeed, today was the day that we liquidated that previous week low. And we sort of wait to see now on this daily what the reaction would be. Similar, this has met its objectives now. That was some sell side liquidity that we just took out. We have effectively a jump start to the downside, but we're holding on to this jump start to the upside. And so not only are we holding on to that, but we've also hit this manipulation block on the daily. That's also a bull manipulation block. So to me, I don't trust this bear impulse structure because it really hasn't broken through the bull impulse structure. Now you've inverted a bull fair value gap, but this fair value gap was really an extension of these others bull PDAs. So I would favor the bull structure on the daily still, with today potentially an objective being this fair value gap that was created yesterday. And then it's depending on how we move into that and potentially through that, then arguably we still have these bull objectives to the upside. So now that we've swept sort of the previous week low, I might anticipate that we get some bull action, but I would wait to see on lower time frames for that to play out first, because we could just as easily come down and tap this fair value gap here, given that we've filled this upper fair value gap from the jump start. So what that means is that today, we might see some more consolidation. Yesterday was effectively an inside bar, but we've already met the bear objectives of the candle analysis. So now it's anyone's guess. All right, with that, let's go do the monthly smart gann concept analysis, 4-hour chart. And with this, we've just expanded our Q3 low. So our Q3 range looks like this. First range created, second range liquidated the highs, and then we moved down off of that. And this third quarter has been sort of an expansion on that move there. It does have this as an objective, so it's possible that we're still in this downward trajectory based on the manipulation candle here. That said, the other way to look at this is that we liquidated external liquidity coming back down for internal liquidity to continue this overall move to the upside. So this is still a potential upside projection on the 4-hour. But if we sort of take out this low, which we were awfully close to doing, that then gets rid of really all bull impulse from the first quarter, and that hasn't been met, right? So we did hit our first distribution areas on those impulses and rejected off. So the only other one that I do see is this, but I believe this has already hit both objectives, right? So there's no remaining, if this breaks, there's no remaining bull impulse on the 4-hour to the upside. Yeah, bull impulse is to the upside. So there's no remaining bull impulse from Q1. So we would expect, which we might be getting right now, we would need an additional manipulation or an additional bull projection block out of here to give us, the market shift back to the upside for bull action. So currently we are in a bear impulse, and we have this with the potential objectives down here. Now, we didn't get the continuation out of here, which you might anticipate. If we're looking at sort of what I've been noticing recently is that, we could come liquidate this external level on the 4-hour here, which I would imagine is also the previous day high. You just put this on. Yeah, it's also, which would be yesterday's high before continuing down. That would be the sort of fake out move. So really have to observe sort of what's going on the lower time frame there, but on the monthly, first range was expansive, second range consolidation with some liquidations at the high, which then eventually led us back down into the first range. We've taken internal liquidity within the first range, and we haven't displaced through it necessarily, like the important internal liquidity. Yes, we've displaced through some, but it's not internal liquidity that to me really mattered as much relative to the overall picture. So we're at the level where I might anticipate further manipulation if we're going to continue up. Which is maybe what we're seeing right now. But current structure on the 4-hour is arguably bearish, except for, do we get a fair value gap here? Let's see. Looks like maybe a teeny one. No. There was no fair value gap there. Was there? No, those overlapped. So I think you could argue that even though we just had this move here, we haven't closed through any opposing liquidity yet, and so, but we negated any bull impulse that would have been used as well. So the prevailing impulse is from this to the downside, but that's counteracted by this to the upside. So we're in an area where we might get some sweeps on either side before the market commits. So I'd say the more immediate impulse has been to the downside, but what it's done is brought us back into the internal liquidity of the bull impulse. So it could be that we see the bull impulse take over here shortly, but as of yet, we're still bearish. So with that. But we just swept this liquidity. So if we close above these levels, if we close above on the 4-hour, the previous day low, and also this level, that would mean we also close above this, then we might have just experienced sort of the 4-hour manipulation and start to get some bullish price action out of here, at least back to the previous day high, if not further. All right, so with that, let's go do our weekly gann assessment on the 1-hour chart. So we're in the second quarter now. Yesterday we created the Q1 range, and since then, when we opened the Q2, get rid of the daily. If we open right here, right, so we effectively swept the true week open and then continued down. I don't see any significant, projections except for maybe this, which has met its end. This really didn't take out liquidity, right? So you could argue that's a distribution area, but it doesn't even matter because we met the second distribution area for that anyway. So we've swept Q1. Q1 low. Right here. You could argue this was manipulation because it swept the EQ of Q1, but again, that's met its objective. So if we look at this as manipulation, which means projection block on this gann assessment. I don't know why I have these not made there. You've hit and rejected this hourly distribution area here. Which note that also didn't close through that initial distribution from this jump start, which is what we're coming off of. So that's in some ways more suggestive that we are going to continue up now. We're back above effectively our weekly open here, right? So this could turn into a big sweep of that. Now there's nothing really telling on this move though on the 1 hour that we have bull impulse yet. So we are currently still in bear impulse. And if you just look at the wick block, we're sort of already at that level. So, another level you could draw here is this breaker block. Now, it's not the best because, again, I would almost like start drawing it down here. The reason I say it's not the best is because you didn't really sweep that high from that breaker block, so it's not really a clean breaker block. There's really not much there. Like, arguably, you could look at this as your breaker block, but then that was already broken through. So there's just not very clear action here. The only thing we have to go on is that we did sweep the low of Q1, and we're reacting off of that. You could draw a larger projection here, which is just the time-based sweep, right? So it's more like that, which would give us distribution areas up here, but that's not confirmed because we're still bear impulse, right? So I'm not even going to draw those, even though it's possible that could play out. This one is gone, so we can start deleting some of the stuff from yesterday. In fact, that's gone altogether. This one hit its end. That's sort of what I traded yesterday. This one hit the first distribution area, which again is what I traded yesterday, but now it's irrelevant because it's been liquidated on the lows. This is still valid, right? So we do still have arguably this downside objective if we start to get a push over from here on the weekly open. Like we've closed below the weekly open, closed below Q1 low. We're coming back into Q1, so potentially this is the reach for internal liquidity, and maybe we get further manipulation to the downside. But currently there are no H1 objectives aside from this larger objective that would bring us to the downside. So it's more sort of failure to continue is what I'm seeing, but we don't have necessarily the bull impulse yet on the weekly gann. All right, so with that, let's go conduct our daily SGCA using the 15-minute chart. And we can see here, I thought I had deleted all this. Guess not. I'm about to though. Get rid of everything, but maybe one of these. I'd got it, Christopher. All right, so let's just keep one of these. So if we look for anything on that 15, what happened? Asia range. London swept liquidity within the Asia range, not the Asia high, but it did sweep liquidity. And then you got to push down. You really didn't get any manipulation until, like clear manipulation block until right here. but then that's already met its end. No jump start there. You came back in. This was arguably manipulation right here because you were within liquidity. You made a high and then you rejected it. Notice that too has already met its second distribution area, so that move is arguably over. Right. So there's not much else as a target there. That said, you got a jump start out of here. So in the 15-minute, you do have, we're coming back into a projection block, and we have not yet met the first distribution area from that projection block. So the 15-minute does have, from New York time frame, New York area, a objective to the downside that has not been met. And there is no clear objective to the upside. So that would put us in a bear market, bear impulse, with potential shorts from this area here. So that's your P-block on the 15-minute. So current market structure is bearish. We have closed back above the previous day low. So if we start to see some bearish sort of continuation out of here, that might be something to watch as a potential trade opportunity. But everything from London and Asia has been met. So this would just be potential New York objectives here down to these levels here. So let me just make sure these levels are correct. They are not. All right, so that's your potential daily objectives right now as to the downside. And I presume you might have a lot of liquidity because there's a lot of people here now that might be playing the bounce off the previous day low and that sort of stuff. So that's the draw on liquidity there. So finally, let's go conduct a session, smart gain concept analysis on the 5-minute chart. And here, contrary, we do have the most recent impulses to the upside. We are in the first distribution area of that upside objective. All right, so we had this sort of wick block created here out of this M15 DA. It's brought us back in. We inverted this fair value gap here and this fair value gap here. Did we get a, I don't think we got a jump start. Low is 487.50. 488. Yeah, so there's no jump start there. It's just one fair value gap. So the only projection block that you really have on this, I was drawing the wick because it didn't close below liquidity. That's when I use wick block as opposed to the full block manipulation block. We've already hit the first distribution area. If we break through that, arguably you have this as the next target, but that would be sort of against the current M15 impulse. And would really bring us back into sort of this M15. So I'd be wary of trading aggressively through to this next distribution area here. That said, right, if it does start to continue this bullish action, could arguably take a trade. Because what could happen is what I see and I've been observing is that you have that fair value gap, and then let's just put this in here too. You have this balanced price range here. And then you also have this inversion, which has already been used, I would imagine. Yeah, right there. You've got this inversion fair value gap right here. Let's see how the folder structure handles all that. Not very well. There we go. So arguably 5-minute objective is to the upside. there is definitely no downside objective that has not been met already. If you look at the initial jump start on the 5 minute, there really wasn't one until right here, I guess. Okay, so before I speak too much, okay, yeah, so that also has been met already, right? Let's make sure this is current here all the way. So at this point, the 5 minute, the daily objective and the session objective are opposite each other. The session objective would bring us back into and almost invalidate the daily objective, right? So the session objective is here to the long side right now until proven otherwise. The daily objective is here to the downside until proven otherwise. So we'll see. One thing to note is that the daily objective is that I have highlighted here was created in reaching a previous objective. And so I don't give as much validity to that typically. And so arguably you could say that this objective could be overridden and that we could then attack previous day high, Asia high, that sort of stuff. So as far as if there's SMT or anything, I don't see any SMT. Excuse me. One thing to note is we did liquidate the low of Q2, right? And all that distribution was done, so a reversal could be expected, which is effectively what we're seeing here with an objective to the upside. So with all that, game plan for the day is you could tentatively follow the session objective at this point, but I'm not sure it's worth putting the risk on there. Unless if, right, we start to get hourly objectives, which we don't have, or 4-hour objectives, which if we close up here, you might start to think, okay, this could be a wick block here, in which case your 4-hour, we could have seen that last sweep just occur on the 4-hour for upside action. And that would be sort of your previous week low here, right? So you swept previous week low, swept previous day low. If we get a close up on the 4-hour in the next 30 minutes, that would be a relatively bullish signal. So, current order flow is up. Session objective is currently up. We can potentially follow that. The equity market just opened, and we can just see sort of how this behaves from here. So this is your 9:30 open there. You did close through this first distribution area on the 5-minute, which would suggest that we're going to hit the second distribution area on the 5-minute. And it might just run up. If you look at all this, this is all low resistance liquidity. It's just straight down. So we could, if we start getting a break right up to this distribution area. Now with that said, this is also low resistance liquidity. So would also not be surprised to see a sweep there. Might want to see how the 15-minute reacts here, because this is, again, within the 15-minute bear projection block. But again, not necessarily giving too much weight to this projection block because it was created as you went to one of the distribution targets. And what that was some serious sell side liquidity that we just grabbed, which was previous week low. Now, what I often look for, if I'm looking at things like this, right, is manipulation on the 1-minute and see where that distribution area is. So this has our next distribution area up here with 5 minutes. The 1-minute sort of aligned with 5-minute. We're in that first distribution area off of this. You also had this jump start here, which I assume has already met its end. Yes. So we could get a pullback here, or it's just going to do what I was indicating potentially. So the 1 minute P block that this would be a trade from would be here. Five-minute close through, right? So 5 minute has the potential to continue up to its next distribution area, but it doesn't hurt to wait for this sort of 5 minute range to play out. ES is above the previous day low right now, as is, ES is effectively relatively right there. We did close through the first distribution area of this 1 minute projection. So if we get a sweep down here, I can suggest that we would come back into here. But I'd want to see this projection block hold. So similar to what I've been noticing, we could get sort of fake impulse out of here. Now, what I don't, what might make me not want to follow that is that we are potentially getting bear impulse on the 1 minute to the downside. So this would be the bear impulse targets on the 1 minute. And that is given we just inverted this fair value gap here. And you've got all this low resistance liquidity right here. Right, so if we break through that, that provides a run down, and then it's going to be a matter of whether or not we can hold this P block or not. Because it might be that we then manipulate this P block. The other one that was created in this move up was this, but that's already blown through its second distribution area, so that's no longer relevant. On the 5 minute, we could be setting up for a nice wick block to the downside, which would give us bear objectives on the 5 minute aligned with the 15 minute, and it's coming out of the 15 minute. So that would be the wick block projection. Arguably, you wouldn't have your bear impulse confirmed though until you close down quite a ways. And in this case, I'm not keen on necessarily trading the 5 minute as if it's still bear impulse, because we do have confirmed bull impulse, and the bear impulse that you would be trading the continuation of has already met its objective. So you've got these two conflicting M1. You're essentially playing this projection versus this projection on the M1. Which one's going to hit, we don't know. Looks like that 5 minute was the same as the 1 minute. That 5 minute wick block. And it looks like it might get run, which would be all the way up to here, which means this 5 minute projection is playing out. All right, we got a sweep of that trend line liquidity, close back up. Break through sort of the bear PDA there. Nothing that I would trade at this point in my trading career, but something to be aware of. uh, that M1, you get that M1 impulse there. But this is a great example of where I might expect this to get a run. You get sort of the fake out on the M1. Everyone goes long off that trend line liquidity. You've now got this M1. Liquidity there. So we get a liquidation of that low. You close to the mean threshold of this projection block, so I don't anticipate that holding. We can watch the M5. We still got 2 minutes on the M5. Also watch the M15. We're in the M15P block. You go to this first fair value gap, see if we close above or below that threshold on that. If we close above that mean threshold, that would suggest that we will go for the next fair value gap in this projection block to the upside, which would then align with the 5-minute distribution area. Looks like we're going to do that. So again, I wouldn't necessarily trade this continuation. I'd like it to sweep effectively some impulse structure for that continuation, which we could do right now because effectively you've got this. I'll leave that on there for now, even though it's about to get invalidated. But you've got this wick block here that some people might trade aggressively, right? It's a wick block below the 930 open. In fact, you closed above the 930 open, then you swept. So I do trust that a little bit more than I might otherwise. But notice that we hit the first distribution area of that already. And we're getting a reaction off of it. And so we could get a sweep of that low and then go. And that's what I might anticipate. That would be a better setup to me. Conversely, right, the other thing to look at is this was a short-term high here. We just broke, so we broke this. So this is gone, as sort of anticipated. And the wick block's gone in the 5-minute as well. 15 minutes still hasn't filled that fair value gap all the way. The anticipation is that we might, but I wouldn't be surprised to see another sweep before we finish this move. Now, given that the 930 was there, that could have been the sweep. So it could be that it's this projection block which we're trading to the top. Five-minute had a nice close outside of the opening range. So that also suggests potential opening range breakout to the upside. But we want to come back for liquidity first. Where's the liquidity? There's liquidity right here. There's a fair value gap here, and there's the P block, the wick block itself. So maybe, just maybe, we get a manipulation out of there for this move. If not, no big deal, right? Effectively, looks like we won't. We're just getting the shoot straight up to the next distribution areas. That's the 15, and here's the 5-minute. So a good thing just to note is that the 5-minute did override the 15-minute, and this 15-minute that I had projected was created on the way to sell side liquidity, which is when I give it less credit. So moving forward, see that, right? You see like, okay, well, this is a jump start. Yes, I understand that. It hasn't met its objectives. Now it could still last, right? But what I'm pointing at is if there are objectives against that, it seems viable to continue trading those objectives because this jumpstart was created to reach objectives that it already reached. So in a lot of ways, the 15-minute chart, the daily chart had reached the bear objectives already, which was the liquidation of the previous week low, a liquidation of the previous day low, London low, right? And you reach the second distribution area from the initial manipulation right here. I believe that was the one. Yeah, so this initial manipulation. So when that happens, right, I trust this I give less credit to this jumpstart. Not to say this won't work, right? We've now reached our 5-minute session objectives, and I don't think we have any new ones. So it could still hold, but it just goes to show that you can sometimes, especially when you get the indication on the lower time frame that you're going to go for the next objective there, that you can trust that if you've already met if the projection that you're suggesting might work out on the 15-minute in this case, but that projection was created to reach other projection objectives, then that's weighted less, right? And so be more important, in my opinion, to wait for confirmation out of here on the 15-minute. And if there are lower time frame 5-minute objectives to the upside, I think it just proves that you can trade those objectives, especially in this case where those objectives don't invalidate the downside move. So at this point, the session objectives that I see on the chart have been met. So there's not much to do yet, except wait for further session objectives to be generated. Now, had you had that concept, right? Had you had that idea that we would continue and you're going to trade that, even so, I don't necessarily see an entry within my trade plan. Even if you wanted to trade this wick block, you never got an entry from there, right? And notice that wick block just reached the second objective there. So on the 1 minute, I don't see sort of anything that tells me how I want to trade. And another example of probably not too interested in being too aggressive on the 15-second, and even on the 15-second, I don't see a good entry. So just one of those where nice upper time frame concepts playing out. 5-minute, I don't really see anything, right? Like a good RR out of this within the market open. But some conceptual stuff to log there on that concept of what are these projection blocks created for, right? Like this projection block was really created as we were going towards already pre-existing 15-minute targets and daily targets and even weekly targets in a lot of ways, because you hit this previous week low, right? Which was the objective for the week, one of the objectives. And when that happens, if you've hit all those, that sort of overrides this more recent projection block, which now we've closed above the mean threshold on. And so less weight. You could assign less weight to that as a projection block that might or might not hold. So we do now have an inversion here. We don't have any projections to the upside on the 15-minute that haven't been met. Because this didn't make anything but maybe a wick block out of here. And we've now met that wick block second distribution area. And we closed outside of it. There is a potential that we could get a jump start out of here, because this did create a small fair value gap here. And we'd have to wait for whatever happens here to form another one. The question you have to ask yourself is, again, back on these, if we form one here, we would really have to close through that distribution area to the upside for me to consider it tradable. And it's the same reasoning that I just went through, because that jump start would be created as we went to objectives that were pre-existing, right? So a little bit less weight on that. Notice there is, we already checked this one, right? 47.50 and 48, and 488. So 487.50 and 488. So there's no fair value yet there, no jump start. So again, the 5-minute objectives have been met. So waiting for new objectives. That's all we're doing right now. I'm not interested in dropping down and trying to scalp a little bullshit in a market like this. Pardon the language, right? But effectively, you could get this. This is a, like, my point is that, right, you could get this 1 minute for the pullback, and that's viable. But I don't necessarily want to trade that because there's no higher time frame objectives. And you know, effectively, the reason that I believe that my strategy has a positive expectancy is because I wait for my 1 minute to align with my 5 minute, which is aligned with 15 minutes. So there's more of the more time frame alignments I get, the more, to me, probable the trade becomes, because there's more reasons for it to go the direction that I expect it to go. Whereas right now, there's no direction on the 5 minute or 15 minute. So if I'm trading, it's purely based on one sort of time frame draw on liquidity, which, sure, it could work, and maybe, you know, you do some testing and you identify that it does work. But I'm more interested in waiting for multiple time frame alignment to give effectively some more weight to the decision, and more pull, right? If we're talking draw on liquidity, I want that larger pull, and that typically comes from the higher time frames. So at this point, I'm not interested in really looking, even though, you know, you might get some trades on the 1 minute just trading that. The impulse structure on the 1 minute, there's no alignment with 5 minute right now that makes sense to me, because there's nothing on the 5 minute or 15 minute that suggests either direction. Now we're starting to get what I was suggesting in the pre-market of potentially forming this 4-hour wick block, right? So if we close up here, we've got a nice 4-hour wick block that liquidated this, which would start to give us the suggestion that we are going to continue to the upside here. Now, it wouldn't be confirmed because we'd really need to close above opposing liquidity to get that impulse, but that does give us our first look at a potential projection, which would bring us up to those all-time highs again out of this effective continuation. So we got 10 minutes for that to happen. On the 1 hour, this doesn't give us anything, right? Because the down candle, the sweep candle, is an up candle. Sorry, not the down candle. The sweep candle is an up candle, and we're sweeping sell side liquidity. For me to have a projection on the 1 hour, I want my sweep to be a bear. Like, for me to have a bull projection, I want my sweep to be a bear candle. So the only thing that I'd have here is this wick block, which has already met its end. Right. So you've already hit that. So there's nothing there for me. So effectively, we either have to have another sweep with a bear candle, or create some sort of jump start out of here. So 15 minute, nothing for me. On the 1 hour, nothing for me. On the 15 minute, looks like we're going to refute this as a jump start. So there's still nothing. Now, what we could start to get, right, is the continuation out of here. We came out of this distribution area, start to close back down here. That might give us a new bear objective on the 15 minute, which would be a daily objective to the downside. Arguably, right, this would also be a hold of this level here. So we would have that as draw on liquidity. So we could get these draws on liquidity to the downside on the daily objective here. If this closes down here in 8 minutes. And that would be that play. So you'd have sort of alignment there. Really want to see it close below the 930 open for that to make sense. And get some alignment on the 5 minute. Now on the 5 minute, you are starting to get this session objective here out of this. So that'd be your 5 minute if it closes, right? But again, we gotta wait for all these to close. Right now it hasn't. So conversely, this could turn into a 5 minute manipulation to the upside. Now, to point out, right, had you played that M1 projection, did you hit it? You didn't quite hit that first distribution area on that one. You're not getting M1 projection to the upside that's tradable. You are getting a continuation out of this wick block on the M1. In 5 minute, you're starting to get something to the upside again. So again, it's just like patience. All right, this isn't anything yet. So we can continue. That was a sweep of the 9:30 open again. Oh yeah. 6 minutes for all this to close on the higher time frame. And it might just not give us anything. Right, so the only sort of maybe viable trade today might have been pre-market around 9. You had this projection block created on the 1 minute and you closed through opposing liquidity. You know, you also had a little bit of fair value gap there, so potentially today could have traded from down here. Now you got your 5 minute confirmation there as well. So like a trade potentially from down here. Then you had this jump start on that one. I don't see, you know, potentially a trade out of this P block. But nothing since the market opened, right? The market opened here, push up, blew through that distribution area, came back down. Now, the only thing I could potentially see that might have been a stop out would have been a close back above 930 and you expect it to sweep again. You know, maybe once you closed here, you tried to get something out of here, but my order would have been on the wick block, not this fair value gap. And then if you had tried to take it from there, I would have been on the fair value gap. So nothing would have gotten tagged in. Another arguable trade would be since we hit all these distribution areas, once you got that market shift to the downside, right? Could have traded out of that P block, arguably. But again, maybe just down to the 930 open. You're trading without any direction on the higher time frame at that point. So I just don't see anything significant based on how I analyze the market. Now we did get that closure down on the 5 minute. Here we go. This would be a 5 minute projection, but we have not closed through any opposing liquidity yet to make the impulse on the 5 minute. So you've got a P block, but your impulse is currently to the upside. You have a P block with distribution areas. I'll be darned. Got the right size. So that is potential market objective, unconfirmed because we don't have impulse. Have not closed through opposing liquidity. $15-minute candle is not giving that continuation. There is this potential still daily objectives. which we're holding on to here, but no confirmation from these lower time frames yet. M1 sort of aligns with M15 now, so you could argue that you could trade the M1. But again, that M15 to me isn't that strong because these objectives that you would be trading were really generated as we met other objectives, and so I don't trust them as much. Conversely, we could hold this 15-minute inversion to the upside, right, and create a nice upside objective on the M15. So that's a possibility there. And if we did that, you might also create this M5 wick block. What did it sweep? The 930 open. So you might get that. That would be in alignment with the some time-based liquidity as well, because you got the 7:30 daily open, midnight open, all up there as well. So that would be sort of the continuation of here, in my opinion, if you get that, which it looks like you might. I would almost trust that more, because that's a continuation of the most recent impulse on the 5-minute. All right, so that's looking more likely to me that this is where we could be going. Get this closure, that would be a good telltale sign. Now there isn't a nice projection on the M1, so you might get another sweep of this low if this does play out. But I'd be watching that, and then as you know, see where this ends up. On the 4-hour, if we close up here, right, we've got this nice big wick block that just potentially formed. So we were forming that wick block on the 4-hour, right? So I'd be looking at this. You know, we could get this pushed back down into here, and maybe we test the mean threshold of that and see what happens off of that. You don't need to, but that's a possibility. On the hourly, we don't have anything yet. We did fill what could have been a fair value gap to the downside, so there is no fair value gap to the downside. We did hold if you were using this as a breaker block, which I'm not. And we did test this projection block, but that projection block's already met its objective. So you can sort of, at the same argument, look at this 5-minute to see if it holds its wick block and see if we get a manipulation on the 1-minute out of there. The 15-minute would have also generated a wick block. Now all of this goes to hell, right, if we break the low there. But this would be your 15-minute, and then your 15-minute DA would be up here. So it looks like we might be getting something out of there. So you can watch this 1 minute. So there's no projection block on the 1 minute yet. That was a 5-minute wick block. We can watch to see if that holds. And then we've got this potential block on the 15 as well. So let's just be patient, see if we get something out of here. You know, that was a sweep. 15 seconds didn't give anything either right there. You're still arguably holding this inversion on the 15. Right, something else to note is that inversion has been tested and we've held the mean threshold, consequent encroachment, I guess, on fair value gaps. But I don't see a good manipulation on the 1 minute to trade this. Right. We haven't, have we touched the 9:30 opening in yet? No. So if we get another test at 9:30 and hold these levels, that could be indicative. Right. But if we break this low here, that's sort of a failure of that wick block. That's outside of 15. Really want to see it maybe tap that 9:30 one more time if we're looking for an entry. Might not happen, which is fine. It's really, I'd say, like 60. So we got the sweep on the S15. Might not need to tap the 9:30, but I'll be patient there. You know, if I miss the trade because it doesn't liquidate the 9:30, I'm okay with that. $45 on the 5 minute to sort of reject that EQ, right? If it closes back outside that wick block, that is suggestive. Could get sort of a break above. This is opposing liquidity here. Could have a trade idea form here if we can close outside of that. These are equals, but that would be a projection block on the 1 minute, which would bring you up to the 5 minute projection off the wick block, but no close so far. So nothing. So we have to wait at least another minute. If I were to take a trade here, 2 contracts. There is no trade here, by the way, not yet. Starting to look like we might get one. But you really need a closure up there on the 1 minute. The 5 minute is holding that P block. So that is suggestive that we could go up there. Arguably, you've got this not so great trend line there. And again, there's no closure, so there's no trade yet. It looks like we're not going to close. All right, so no trade. Doesn't mean it won't work, it just means that I'm not trading it. And you have this projection outside, so we could start to see maybe a sweep of this 9:30. The key is that for this idea to be valid, we cannot sweep this low, right? And conversely, if we close below, you then have M1 impulse to the downside off of this trend line. But the 5 minute is arguably holding its projection block, which is that idea here, and you're closing right on it, right? So we get this sort of closure out of here, you can almost take the trade as is. Maybe you get a sweep of this low here. and that would be the better trade. That was a nice impulse out there to an extent, right? But you didn't close above that. You did get your 15-second here. Could arguably look at the trade there. I just don't like that it didn't close above this most recent high, or even challenge it, really. Oh, it did challenge it, but it didn't close above, right? Now, it did invalidate the pair impulse. It looks like a trade to me there. Be aggressive on the 15-second. Right, you're effectively coming back down, and it's a retest of that trend line liquidity. And you could argue that you could trade something like that, but I don't need to be so aggressive. Let it be. You see what I mean? Because if I extend this out, that broke above it, retested, and now potentially we're going. Your M1 impulse is arguably to the upside at this point. This is your projection block. That was also a test of the projection block, so that could have been the other idea there, and that would have allowed for this stop to get run. This is where I anticipate, though, that this might get run, so I'd rather take a trade if we can get down and sweep this low, and then get a nice reaction off of that, rather than take effectively the projection block trade, especially because we're just failing to close above this high here. So I'm more interested in sort of a sweep of this. And then you got a nice RR up to the 730 open. See if we get something like that, like your 5 minutes confirming this as a P block, right? Playing the prevailing trend because you failed to get any inverse trend. So again, this could go without me. Wouldn't be the first time. You get another possible sweep level here now. Effectively, what I'm arguing is that you might need more liquidity to make this move. But again, could be wrong. That closed up. 15-minute is also confirming this P block, which gives even more confirmation on this trade. Right, and the 15-minute DA is up here. Notice that my initial target is at 730. So this is the sweep that I might anticipate. And at this point, you could even look at this as a potential sweep level, right? We could still sweep down into the 930 and go from there. So that's the 1 minute sweep, back in the 1 minute P block. Another test of this trend line, really. I'm waiting for this pattern that I've been seeing over and over, where you get sort of this fake impulse out, right? And we don't necessarily have, we sort of have it right here, but that really didn't break a high. And so I might anticipate that we get what we're getting right here, where there's no bear impulse to the downside. We come back in and sweep sort of one of these levels and then go from there. I don't know why my trading view keeps doing that. Now we are getting this 15-second projection to the downside, which could give us an idea where it might come down to. Here's this M1 right here. All right, so that would succeed. This is sort of what I want to see here. Again, suggesting that we might sweep this low. You know, we are sweeping this one. Dadgummit, what the fuck? I'm not taking a 15-second there. That was a nice engulfing candle on the 1 minute, which again could be setting up that fake out. I don't see this as the major fake out. Now that could have been it, right? And we could go from here, but what is this from? Oh, that's still left over from that. Practicing patience. I missed the move. I missed the move. That looks like good fake out to me because it's not the best projection block there. You do have sort of this wick block that you could use there. We've already hit the second DA. I mean the first distribution area. So we can even come all the way back up into here and then come back down, liquidate, and then go. And that would still be valid for me. We're getting a nice move on the 15-minute. This could break, right? It could break without me. Arguably could have taken trade just out of this P block. Just saying fuck it, or even at the mean threshold of the P block is something that Blake and I have been discussing. That would have been nice, obviously. That's the second distribution for what I see as potentially a fake break here. So again, I'm waiting for price to come back into here at this point. The downside to that is if we do come back here and close below, we have bear impulse there off of that. This would be a wick block to the downside. At the very least. If we close where we are, it would be a wick block. So that's going to be the 15-minute close there. Notice 15-minute didn't close up, but yeah, that gives us these trajectories down here. Let's see if we get a nice sweep of this. You got sort of 5-minute liquidity here too. So you could trade that 5-minute sweep there, 9:30 open sweep. Notice that this first distribution area on this wick block brings us right to those levels. The downside to that is that it would invalidate the M1 impulse to the upside. So there's that M1 liquidity level. See if we get down to here or not. You know, with this closure down here, that's impulse to the downside of the M1. So it got the closure below that low. Right? So I don't necessarily want to trade the 15-second to the upside right now. Unless if we hit this distribution area on the 1 minute and get a nice reaction off of that. That was the mistake I made yesterday, right? Is I was like, oh, well, we're at the liquidity level I like. If I get 15-second here, I'd be trading it. But I would need M1 to confirm, which we could get confirmation if we close up here on M1. We've got 10 seconds to do. So one level that I'd be interested in would be these, right? Which we didn't. So there's no confirmation on the 1 minute. That's an inside bar right there. So again, I really wouldn't be interested unless we get the push down here. Now, if we liquidate down here, 9:30 open again, sell side liquidity on the 5-minute, then you could start to see something of interest. And you would even sort of get this as your fake break on the 1-minute here, right? And you'd be maintaining this one. But this one has already met its end, so that's not really of interest anymore, is it? No. Now this S15 jumpstart is holding off the liquidity sweep of those M1s. It's an old entry model. Again, if we get some sort of closure up here, I don't know why the 15-second keeps doing that, which we're really not, right? We're getting further downside action there. So you get sweep of all this into this DA. The argument is that this wick block is holding on 5-minute and 15-minute. That's what we're trading here. That's the idea. And at this point, you really have also 15-minute buy side liquidity here that could be one of the immediate targets. The counter argument right now is this was M1 impulse. That's your M1 wick block. Trying to determine whether I could trade any of this. Let's see. Closure below the mean threshold of that wick block, suggesting that might hold. You know, I was looking for the sweep of this, but I didn't get the move on the bottom that I wanted. Now we've engulfed there. Arguably, that is the trade that I've been talking about with Blake, is that you could enter like that. I'm just not too keen on that. I don't know this pattern well enough to say that that's valid. But you've engulfed this sweep of this fake out, right? To me, this is sort of your fake out, your wick block there, up. This fails, so we just close that. Again, all of this is on the supposition that this 5-minute wick block and the 15-minute wick block that we formed here off the 9:30 open is going to hold for these upside targets, which I think is relatively valid. We got more 5-minute liquidity. So the thing that's making me stay out is that you're building some nice liquidity to get swept before a potential move to the upside. Also, this 1 minute now is impulse to the downside. Off of this wick block, which is a sweep of this. It was also a sweep of this. And then a closure below opposing liquidity right here. So that is the current idea, is that we might come and get one more liquidation, right? And this is more convincing. Now, the downside is this wick box holding, so I can see price coming all the way back down into this distribution area here. If it does break this low, right? If it breaks this low, then this projection block is no longer valid. Getting cold again. I will be right back. I'm gonna get a sweater or something. All right, so this is looking like that sweep, potentially. And this liquidity up here, right? That wouldn't be a projection block. No sweep of liquidity. M15 gave you the S15 gave you an entry here. Sweep of all that liquidity takes you up to this. Looks like we might just break. Or that could be that same sort of false impulse out. Use this liquidity, continue this actual wick block. No, because it broke that high right there. So this no longer exists. The M1 impulse to the downside is now non-existent. It was a sweep of buy side on the 5 minute. It was bull impulse on the one, but you've already reached the distribution area of that impulse. Arguably, this impulse is holding, but I wouldn't want to trade it without a sweep of this sell side liquidity on the 1 minute. So that would be the fair value gap entry on that. You failed to close above that 5-minute liquidity there, so I'm not too trusting of this as the breakout. It does seem imminent. But when? Arguably on the 4-hour, we'd come all the way, all the way back down to here and still have a wick block. 5-minute, come all the way back down in here and get a better manipulation for this continuation, right? Like we have this projection block here, which is what I'm effectively looking for a trade out of. But we don't have the impulse confirmed. It's just trading the prevailing impulse. And so in the 1 minute, I'm really waiting for something a little more convincing than what I've seen so far. When we broke the trend line to the downside and we came in, swept this liquidity and continued. So arguably this is the P block that, I think you can make the argument this is valid here once we broke up there. And that looks like that was. So it's just learning these things again, right? Like that was a sweep of the fake out. I didn't like that S15 entry. You didn't get the immediate engulf. You got the engulf here, so arguably that was a trade entry, maybe a sweep of this liquidity. I think that was it. It's a nice 5-to-1 trade to the 7:30 open. So that's that. That confirms that 5 impulse to the upside. 7:30 is here. We still have the previous day high. It appears to be the draw on liquidity at this point. I need to sort of look at the video and determine why I didn't take that. Maybe a little bit of hesitation after yesterday. Trying to be very regimented about everything. We did just now invalidate any bear impulse on the 15-minute, in my opinion. So that broke this candle there. So this 15 minutes gone. So again, that theory that I was talking about earlier today, where effectively this shit gets invalidated once, or isn't, I don't weigh that as heavily. So that was sort of the M15 inversion. Hold it on, you've now got this M15 inversion. I'm not sure what this is. This must be off of, I'm not sure what this is. That was supposed to be. We could argue that, but that's the same as 5 minutes, so I think I just let that be. But at this point, you do have this as your target, daily open. So we've got projections on the 15-minute and 5 minutes, the previous day high. Right, so we might have missed that initial entry, but if we get some continuation out of here, I would argue that there might be some more entries coming up. This is sort of a mess, isn't it? Let me clean up some of this M15 just so we can get a better view of what's going on. and then 5. Look at this 1 minute a little closer. All right, so we hit that one. We can clean up all that. Trend line's gone. P block. I'm not concerned about that as M1 liquidity anymore. Yeah, I mean, this was really sort of the confirmation that I was talking about. I'm not sure why I didn't trust that, but that's the trade that I've been looking at these days. Is this sort of that? All of this effectively is how that liquidity tends to then really, I think, get generated and then move out of there. So from that, we get the first distribution area of that target. So really, the potential trade opportunity was could have taken the mean threshold or the liquidation of that, but really this P block mean threshold when you get this liquidate into it and then go. Arguably, you have this S15 entry there as well. 730 would have been the first target, or even that distribution area right there, which you have plenty of R2. So need to log that in the log of ideas because that's that. That's what I've been looking at. I've seen that over and over, and definitely interested in that as a trade idea. Now we haven't quite liquidated the session high here. That's Q2 session high. From the session high. We're starting to break through that first distribution area. Daily opens, time-based draw on liquidity here. This 15-minute, where did that come from? That's on this 15-minute wick block for that continuation. And we've got the final one here. So I do see previous day high in sight. So there's a lot of time-based liquidity between here and there. Oh, All right, so arguably, if we're going to continue, we would close above here at 7:30. This is sort of the that looks a lot like the continuation manipulation on M1 off that 7:30. You sort of want to see it close above the 9:30 open. 5-minute tapped this fair value gap here. You do have this fair value gap down here too. I didn't realize that. So we just created a jump start on the 5-minute. You've still got these objectives up there. Close your opposing liquidity there. Your M1 manipulation is to the upside. That was a fair value gap. You haven't really created a breaker. I was just discussing this with someone else where I sort of want to see this low swept at this point again. I might, I think there was a lot to learn today, and I'm sort of digesting it still. And a part of me is just trying to digest it, right? I'm trying to figure out, okay, like I had an entry, I didn't take it. Why didn't I take the entry? And I'm not sure that because of that, I'm not sure that my current state of mind is suitable for now taking risk on trades. So I could see an argument for saying that could have entered right there again. But again, I'm not in that mindset of willing to risk on something like that. Sort of missed, to me, I missed the trade. Like this was the trade. And arguably you could hold that all the way up to the previous day high, right? That's the trade. And I didn't pull the trigger. And, at this point, if I pull a trigger, is it based on, what is it based on, right? Is it based on me being upset that I'm not in this trade? I don't know. The fact that I didn't pull the trigger on that initial trade, to me, I'm trying to figure out why. So I see it eyes close above the 7:30 open. I see it sweep to 7:30 open again, arguably, but you are at the daily open and you rejected that. Now I do see the draw on liquidity to the upside here. Still, right? But we're at this 15-minute objective here. Like the other thing that I see now is this 4-hour just created this fantastic wick block, which is also something that I was trying to trade out of, right? Effectively one of the I don't know what this is. I'm just going to delete that. Seems I have a lot of projections on the chart that don't need to be there. All right, there we go. Right, so my presumption at this point, especially if we invert this 4-hour here, is that we've created that bull impulse for the continuation. That's where I would go with this. And that almost brings us up to all-time highs again. Again, I think arguably you could have taken this re-entry here. Or maybe up to there. I think that's the other trade. But you're coming into this 15-minute. I didn't like it quite so much because you had daily open right there that we hadn't closed above on the 1 minute. But now the 5 minutes closed above it. And you arguably have this continuation block on 5 minute here. For that. So look at this as your projection block on the 5 minute. Now in your 15 minute, you haven't closed above the daily open. You are creating potentially fair value gap here. For continuation. But I might anticipate, especially because we just hit the first distribution area of the wick block that informed the first trade, that we might need to come back for more 15-minute liquidity. Take a brief break. I'll be right back.